The EU summit's been hailed a success by both the EU President Ursula von der Leyen and the EU Council President Charles Michel. But after 4 days and 4 nights of difficult negotiations, raised voices and reports of fists being beaten upon the table, is it really such a pivotal moment as was suggested in the post-meeting conference? Welcome to today's IG Trade in the Markets podcast. I'm Jeremy Naylor. Today we're joined by Martin Essex, analyst and editor at Daily FX. Martin, welcome. So an agreement on the €750 billion post-pandemic recovery plan. It all seems really good. Am I being a bit too cynical in suggesting this is another EU fudge?
Hello, Jeremy. Thanks for inviting me. I don't think you're being too sceptical at all. It is, in a sense, historic because €750 billion, a big amount of money, is going to be ploughed into those European countries that are suffering most from the pandemic. But let's face it, it's the same total amount as was on the table right at the very start of this summit. €750 billion obviously is a lot of money. And what's changed is that there will now be 390 billion in grants, and that's less than the originally targeted 500 billion. And that means that more money will be lent to those people that need it most rather than given to them. And I think that's a big but. As you know, I'm sure, there was a row between the so-called frugal four. That's the North European countries that are relatively wealthy. In this case, we're talking about Austria, the Netherlands, Denmark, and Sweden. And they have to try and persuade their taxpayers to give money to other countries like Spain and Italy that some taxpayers, I think, will find less deserving. So in a sense that they gave way, the frugal four gave way. But on the other hand, what they won is they won rebates of the money that they give to the European Union. So they got some of their own money back. So I think it's fair to call this a fudge, although it is historic in the sense that the European Union is now borrowing money. It's using its AAA debt rating to raise money. And this could conceivably be the start of a fiscal union.
I just want to pick up on that point about rebates. This is interesting for me, and indeed, like me as a young journalist, you'd have covered the 1984 rebate debate on the EU contributions that the UK made at the time, achieved by Margaret Thatcher. She went in with her handbag waving, telling people she wanted her money back, and she got it. Post-Brexit, the EU have wanted to ban these rebates, but I mean, they are still around, and the frugal four have managed to receive increases in their rebates. And in fact, I think in some of the reports coming from this summit at the weekend, there were some suggestions that Emmanuel Macron, the French president, suggested that the Dutch contingent were acting like the UK around Brexit. And they are now taking up the mantle of being the biggest skeptics for the European Union. To what degree do you think the EU could come to regret this move by expanding rebates and effectively continuing their existence?
Yes, this is really interesting, isn't it? So the bad boy of the European Union is now being painted as the Dutch Prime Minister, Mark Rutte. And there's another bad boy as well, who is the Austrian Chancellor, Sebastian Kurz. And so these people they're not exactly in the same position as Margaret Thatcher was, but they're certainly not making life easy for people like the French President Macron, who would like an ever closer union. It does look as though these countries, these leaders, are beginning to say, well, hang on a minute, we're not prepared to put money indefinitely into this project to support other countries like Portugal, Italy, Greece, Spain, Cyprus, and so on, countries that they regard as being not sufficiently frugal. So I can see more problems coming up between people like Macron on one side and Rutte and Kurz on the other side. So perhaps the EU has actually reached this agreement at the expense of future cohesion, if you like to put it that way. The other thing I should mention, which we haven't mentioned so far, is that there's also a huge budget, a huge European budget. And of course, it was the UK that used to object to these huge budgets. Now I suspect, although Rutte and Kurz have agreed to it, that again this might be a problem in the future with all this money being centrally spent, which is something that the UK hated, and I suspect some of these other countries too. I mean, if you look at the markets, the euro has broadly speaking received this well, and stock markets, European stock markets, Germany, France, Italy, Spain, have all broadly welcomed this agreement. But there are things to just worry about slightly. I mean, yes, those markets could continue for a while, but I already see second thoughts coming in. I can see already that this initial wave of euphoria is beginning to slip away. So actually, I'd be really surprised if we continued to see stock markets powering ahead and the euro powering ahead. We're already, for example, seeing the euro falling against sterling. And you might say, well, sterling's got a lot of bad things going for it as well. So why is if everything is wonderful, why is the euro falling against sterling? Just a beginning of a doubt there, I would say.
Well, of course, that's been one of the things that's been levelled at the EU about Brexit. And of course, this is one of the reasons being touted as one of the reasons why the UK wants to leave in the first place, because the EU is not all wonderful. How do you see the long-term prospects? Is it just a question of continuing to see these fudges? I mean, what's it looking like post-Brexit, for example? Because we've seen divisions starting to emerge about how the negotiations are being undertaken, and this final round, or these final rounds that have been taken, ultimately, hopefully, to get some sort of a deal between the UK and the EU. There are interested parties now suggesting that that Barnier is not doing it in the interest of everybody.
Yes, that's interesting, isn't it? The way these things work, I think there will be an EU-UK deal by the deadline later this year, because that's the way the European Union works. That's the way diplomacy works. There will be a deal. The question is, how important a deal will it be? How big a deal will it be? Or will it just be what you called another EU fudge? Well, we have to wait and see. But I think there will be a deal, and I think it won't add up to very much. And I wonder why it's really only sterling that has been responding to these post-Brexit negotiations rather than the euro. I've never quite understood why it's sterling that falls when things look bad and it's sterling that rises when things look good rather than the euro. I rather suspect that at some point euro traders will begin to say, well, hang on, this is important for us as well as the UK, and that you might see the euro respond to this as well.
Interesting point. Martin, we'll leave it there, but thanks indeed for joining us for this look around primarily at the EU summit and the conclusion that we've seen there. That was Martin Essex, analyst and editor at Daily FX.